Hey guys, so I know that some of you have messaged and requested to see how I use the moving averages scalping strategy. So this is a 5-minute chart. I'm trading USD JPY and this is the New York session. And I know this screen looks very busy, but just bear with me. So as you can see on the 5-minute chart where the 8 exponential moving average and the 50 purple moving average just crossed, I entered the trade right on the third candle. Okay, so overall right now, the 200 moving average shows an uptrend, but if you see the RSI and the money flow is the dark purple line. So the money flow is way below 50, which tells you that it's going to keep going down. And the RSI is right above 20. Okay, so what's going to happen, you can just kind of watch and see, but we're just scalping this. So this is a demo account that I'm showing you right now, and this is what's happening. What you would do is you would set your stop loss right above the purple 50 moving average, which is right here. So we entered at 110.820, and if you go a little, so your 50 purple moving average is at 110.83. So I usually will drop my stop loss. I usually will go off of support and resistance, usually on the 1 hour time frame. Now, sorry, I have a lot of pivot lines here, but what you could do is just drop it about 8 pips above your 50 purple moving average, or you can drop it like right above the highest previous high. You could do like 5 pips above the previous high, which will still average to be about 10 pips or so, like a 10 pip stop loss. And you could do that and aim for a 10 pip gain or a 15 pip gain. And then once your trade is in profit, you can just modify your stop loss and do a trailing stop loss. So for example, I'll just go ahead and put in, so 82, 83 to 45, 86. I'll just go ahead and do a 10 pip stop loss because that'll put us way above. So it'll be 92. That'll be way above where we need to be, and it's still a pretty decent stop loss. So let's go ahead and hold down on this, and we're going to modify the trade, and our stop loss would be 92 because we're in a sell. And then our take profit, we got in at 82, so let's do a 10 pip gain, 72. Okay. And then all you do is you leave it and let it do its thing. And so I'm pretty confident that this will. And now another thing too. So usually you want good separation between, because you want to avoid fake outs. So usually you want a good separation between your 50 purple moving average and your yellow moving average previously. So if these lines were really tight, then you wouldn't want to enter. But if you have some nice space between your yellow and your purple moving average, then that's a good indication that it will go your way. So let's give it a minute or so, and hopefully I can show you this trade going into profit. Okay, so this is where we are right now. I usually just leave it and let it do its thing and I go on to the next trade. But mainly I trade just one currency pair and I do multiple positions. So, and I also do the 4 rule strategy as well. But this is how I use the moving averages strategy as well. I use it a few different ways, but this is just one way that you can use it. All right, so if you even look previously, if you look at, for example, if you look at the last cross where the purple and the yellow moving average cross and you see where price went long and you see that nice buy, okay, you see that? And then where price suddenly started. So you could have gotten, let's see, so if you would have crossed about, if you would have entered right here at 82, you could have gotten about a 9 pip gain. So, you know, you can monitor it from time to time. hold on one second. You can monitor it from time to time. You can do, I usually do a 10 to 20 pip take profit, just depending on what session I'm trading in and how much I want to go for. So look at this. Okay. So see how you got a nice cross on the 8 exponential and 50 purple moving average. All right, and look what's happening. See, your RSI is way down. You see that? Okay. So I'll just keep showing you what's happening. So now what we'll do, since we entered at 82, if we want to make this a risk-free trade, this would be a top stop loss, but you could wait for a little bit and let it keep dropping. And what you could do is just move up your stop loss to 83, for example. Well, hold on, let's let it drop a little bit more, and then we'll go on from there. But I love moving averages. See? Okay. And now maybe we just want to take profit because we're not going to be greedy. So let's go ahead and close that with profit. All right. So there you see how the moving averages work. So all you do is, I really like this because it is pretty accurate. You can back test it. Now, of course, there are errors with moving averages. No strategy is perfect, but you want to have confidence in your strategy. And when you back test it, you practice enough, then this just looks marvelous, right? We should have. Now, another thing you can do is you can stay in the trade and you can, oh my gosh, guys, look what's happening. So sometimes you'll look at trades and you're like, oh my goodness, I got out too soon. Why didn't I just move up the stop loss? Right? But this is New York session. So I love the New York session. Most times I trade the London session, but I just wanted to show you guys this live example and hopefully you understand it. If you have questions, drop them on this video. I will continue to share as much value as I can. If you're interested in trading with IML and joining our team and making money from home, get in touch with us or check the description area and we'd be happy to help you. Bless you guys. I hope this is helpful.